Ladies and gentlemen, good day and welcome to the Granules India Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Irfan Reis from MUFG. Thank you, and over to you, sir.
Thank you, Muskan. On behalf of Granules India Limited, I extend a warm welcome to all participants on Q2 and H1 FY26 financial result discussion call. Today on our call, we have Dr. Krishna Prasad Chigurupati, Chairman and Managing Director, Ms. Priyanka Chigurupati, Executive Director, Mr. Mukesh Surana, Chief Financial Officer, Dr. P.V. Srinivas, Chief Technology Officer, and Mr. Sanjay Kumar, Chief Strategic Officer. Before we begin the call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements, which are completely based upon our expectation, belief, and opinion as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Dr. Krishna Prasad, sir, for his opening comments. Over to you, sir. Thank you.
Thank you, Irfan. Good evening, ladies and gentlemen, and thank you very much for joining us on our Q2 FY26 earnings call. We appreciate your continued interest in Granules. We have uploaded a detailed presentation of our quarterly performance on our website, and I trust you had a chance to review it. I will start with an update on the US FDA remediation at our Gagillapur facility. We are in the final stages of remediation following the August 24 US FDA inspection and the subsequent warning letter. As communicated during the last investor call, we have reached the eligibility milestone for a request for a meeting and reinspection, and we have now initiated formal engagement with the agency. We have been granted a meeting with the FDA in January 2026, which is Q4, and remain on track with all the required remediation measures in preparation of this interaction. We continue to submit monthly progress reports with the latest update provided on October 31, 25. In addition, multiple status reports have been shared to date, and the FDA has raised no concerns regarding the adequacy or pace of our corrective actions. Cross-contamination testing on more than 3,000 retrospective and concurrent samples have also shown no failures to date. Meanwhile, the Gagillapur site had received a GMP certificate from the German authorities, an outcome of the inspection completed in February 25. The site had also completed 8 customer audits with no critical observations and received the UL certificate last quarter. The facility is now cleared by the German and Danish authorities, with Denmark granting us a EU GMP certificate in July 25. Across our network, multiple regulatory milestones have been achieved. At GPI site located at Chantilly, Virginia, the US FDA has issued an establishment inspection report for the unannounced pre-approval inspection conducted in June 25 for a first-to-file controlled substance ANDA. Our API Unit 1 facility at Bonthapally has received an EIR and has been classified as VAI by the FDA following the June 25 inspection. Our Greenfield GLS facility at Genome Valley, Hyderabad, has received US FDA approval for a product following the PAI conducted between July 28 and August 1, 2025. This marks the first FDA approval for the GLS site, strengthening our finished dosage capabilities and enabling multi-site manufacturing. In the coming quarters, inspection for the GLS Genome Valley site inspection by the European authority is also scheduled. With these developments, we are confident of returning to the growth trajectory for formulation business from India, free from delivery constraints. The successful US FDA inspection of a greenfield formulation facility at Genome Valley unlocks an additional 10 billion doses of formulation capacity, a 40% increase over the existing 26 billion dose capacity at Gagillapur. It also establishes a second source supply of finished dosage and PFIs to the US from India. Supplies of monograph products to the US have already commenced, and ramp-up of prescription product supplies will follow this FDA approval. With remediation at Gagillapur expected to conclude in near future, post which we anticipate securing new product approvals and enabling the site to fully support our return to the growth trajectory. Together, these steps will free us from delivery constraints for both the US and EU, enabling us to fully leverage the growth potential of our formulations business from India. Additionally, growth will come from CNS ADHD segment from our GPI facility in the US. Scale-up of large volume products in the US and Europe, moving up the value chain in Europe, as well as the oncology capacity monetization from Unit 5 in Vizag, creating a balanced platform for near-term performance and long-term growth. Our peptide CDMO platform, SLS Peptides, built on Sen Chemicals' strong Swiss legacy, is progressing well through its integration and capability building phase. Our Swiss innovation Indian scale model is resonating strongly with target customers, and Sanjay will take you through this later in the call. To conclude, we are entering the phase of reviving our growth with a stronger quality foundation, expanded capacity, and a more diversified portfolio. Near-term momentum will be driven by the ramp-up of prescription supplies from our Genome Valley facility, continued growth from our US manufacturing operations, moving up the value chain in Europe, and finally, expected normalization of operations and new product approvals from Gagillapur post-completion of remediation. Over the medium to long term, our strategic expansion into high-value segments such as peptides through Sen Chemicals and SLS Peptides, alongside oncology and new dosage forms, will further strengthen our competitive position. Supported by our sustainability commitments and disciplined execution, we are confident in delivering sustained value to all stakeholders. With that, I will now hand over the call to Sanjay Kumar, our Chief Strategy Officer, who will share more on our peptides and CDMO growth platform.
Thank you, Chairman, sir, and good afternoon, everyone. Let me take you through the development and progress of our peptide CDMO platform, SLS Peptides, which is being built on the strong foundation of Sen Chemicals in Switzerland. SLS operates as a separately managed subsidiary, maintaining an arm's length relationship with its parent, that is Granules India Limited. The Swiss site at Sen Chemicals continues to function as our global R&D and CDMO hub, ensuring complete data confidentiality and IP protection for our customers. In parallel, SLS India is being developed as a scalable manufacturing and R&D backbone, creating a Swiss innovation and Indian scale platform that differentiates us in the global peptide CDMO landscape. A key milestone on the India side is the establishment of the Peptide R&D Center of Excellence at Indian Institute of Technology, IIT Hyderabad, which is now ready and will become operational this month. Over the past few months, the Sen and SLS team have collaborated closely across Switzerland and India on CapEx execution, quality initiatives, and various other support functions. This has helped reshape the business into a true CDMO model focused on complex and emerging peptide segments. At the same time, we have strengthened leadership, governance, and performance management system at the site. Our quarterly performance was in line with the expectations, reflecting the ongoing transitions, integration activities, and inherent variability of CDMO operations. Importantly, the underlying traction remains strong. We are in an integration and infrastructure upgradation phase and expect to turn profitable in Q4 of this year, while continue to target FY27 as the first fully synergized and profitable year for Acelys. On the commercial front, customer engagement continues to gain momentum. Recent interaction at major industry events, including CPHI Frankfurt and ongoing TIDES Europe in Basel, from where I'm speaking right now, have reinforced growing interest from leading innovator pharma companies, emerging biotech and cosmetic peptides customers. We are seeing multiple feasibility programs, new inquiries, and renewed discussion with several global innovators. Our LPPS hybrid chemistry capabilities and the India-scale manufacturing narrative have been particularly well received by early-stage biotech companies seeking agility, responsiveness, and cost-effective development pathways. Senn Chemicals' deep expertise in liquid phase synthesis continue to attract innovators looking for scalable and economical process development and manufacturing solutions. In the cosmetic segment, Senn's TFA-free peptide offering remains a unique differentiator valued specially by Europe-based innovators and brand owners. In summary, Acelys is now emerging as a differentiated peptide CDMO combining Swiss craftsmanship, Indian efficiency, and global reach. With rising partnership interests, advancing technology collaborations, and growing customer confidence, we are building a strong foundation for a credible and competitive peptide CDMO platform. With that, I will hand over to Mukesh Surana, our CFO, who will take you through the financial performance.
Thank you, CMD and Sanjay. Let me take you all through the top financial parameters now. Revenue. The second quarter revenue were rupees 12,970 million as compared to rupees 9,666 million in Q2 FY25, reflecting a growth of 34%. And revenue sequentially grew by 7% as compared to Q1 FY26. Year-on-year growth was primarily driven by the formulation business in North America and Europe. In Q2 FY25, the company had voluntarily paused production in Gagillapur plant to reassess the potential risk on account of the US FDA observations. The sales breakup as per business divisions and geographic regions are presented in our investor presentation, which is available on the website. Gross margin. We delivered a strong gross margin of 65.7% in Q2 FY26, representing an improvement of 368 basis points year-on-year and 82 basis points sequentially. Gross margin improved primarily because of improvement in operational efficiency and product mix. EBITDA and EBITDA margin. EBITDA for the quarter was rupees 2,782 million, that is 21.5% of sales as compared to 2,033 million, that is 21% of sales in Q2 FY25, an improvement of 42 basis points from Q2 FY25, despite EBITDA loss of Acelys Peptides of rupees 200 million. EBITDA as percentage of sales for Q2 FY26 is improved by 106 basis points from Q1 FY26. The improvement in EBITDA was primarily due to sales growth and margin expansion. R&D. R&D expenses for the quarter were rupees 705 million, that is 5.4% to sales, as compared to rupees 524 million, that is 5.4% to sales in Q2 FY25, and rupees 678 million, that is 5.6% to sales in Q1 FY26. We will continue to spend similar expenses to support long-term strategic growth. Net debt. Our net debt stood at rupees 10,241 million as compared to rupees 9,480 million in Q1 FY26, primarily due to increase in capex spends in the quarter. Cash to cash cycle. Our cash to cash cycle was 204 days in the current quarter as compared to 205 days in Q1 FY26. Cash flow from operations. Cash flow from operations for the quarter was rupees 1,937 million as compared to rupees 2,806 million in Q1 FY26. Capex. Capex spent during the quarter was rupees 2,112 million as compared to rupees 1,137 million in Q1 FY26. ROCE. ROCE for Q2 FY26 is 16.2% as compared to 16% in Q1 FY26. With this, I open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Tarang from Old Bridge Asset Management. Please go ahead.
Hi, good evening. Congrats for a strong quarter and the compliance outcomes that you've seen for a couple of your facilities in the last quarter. I had a couple of questions actually. One, just to get the health of the organic, the base business ex Sean, is there any positive or negative one-off in this quarter?
Good understand.
So you are, Tarang, one-off with respect to the overall Granules group you are asking or any
Yes,
specific
yes.
question?
I mean, were there, special one-time opportunities, or some one-time expenditures that you incurred, in this quarter?
So the US FDA consultancy expenses is continuing. Other than that, it is more or less similar. Of course, post-acquisition of Granules, there is a full quarter loss in the current quarter.
Okay. Second, given that this is the first full quarter of Granules getting consolidated, would it be fair associated with Granules are now baked into your current quarter, and this is how it should perhaps reflect from future quarters?
I think we lost you in between, Tarang. Can you repeat that question?
I'm saying with the first full quarter of Granules integrated into the business, would it be fair to presume that all the fixed costs associated are baked into your P&L, and this is the trend that we should see going forward, or we could see further escalation in your cost structures?
In terms of fixed cost, Tarang, it's, full quarter expenses have been considered, so it will be similar going forward, maybe some additional, if at all, if you want to hire a headcount. And with respect to the revenue and the profitability visibility, Sanjay has already covered in his discussion. Sanjay, you want to add on?
Yeah, sure. So, Tarang, the same thing as Mukesh confirmed. There could be minor headcount-related expenditure as we build our operations in India going forward. But from the revenue and the cost perspective, the things are expected to get better from here.
And just last two follow-ups. What was the final outlay for this transaction? My sense is there must have been some adjustments that might have been incurred at the time of outlay. So just wanted to get the final outlay. And second, I think there's a German subsidiary that's been involved. So if you give us a sense of
Sorry to interrupt, your voice is not clear properly, Mr. Tarang.
I'll join back the queue. I think there's some problem at all. I'll join back the queue. Thank you.
Okay, no worries. Thank you. The next question is from the line of Ritik Sheth from One Up Financial. Please go ahead.
Hi. Good evening, sir. So a few questions from my end. So firstly, Granules includes Sen Chemicals, right?
Yes, Ritik.
Okay. So this 20 crores is related to completely Sen Chemicals. Would that be a right understanding?
Yeah, it is largely Sen Chemicals only. As well as we have just started some of the R&D infrastructure setup.
Okay, got it. And sir, in your opening remarks, you mentioned that you expect to turn profitable in Granules Peptide. So what kind of revenue trajectory should we expect going forward in Granules Peptides and Sen Chemicals combined? And what is the base right now, if you can give us that figure for Q2?
Sanjay, why don't you go ahead with that? But basically, I don't think...
we don't give guideline, but Sanjay, you can give a strategic outlook.
Yeah, sure. So sure, happy to jump in. See, we will be unable to divulge the details at a quarterly split level, but it's safe to assume that the base which we acquired is just under 20 million. and the growth will be multiple around this. We're not looking at incremental growth around it, but will not be able to provide you a quarter-to-quarter guidance per se, and current base business is in no way reflection to what we intend to build, given the excitement in the peptide space and the encouraging new inquiries that we're receiving basis our Swiss and India play. So we'll leave it at qualitative at this moment. Yeah, that's where I'll stop.
Sure. And just to harp on Acrylic Peptide and Sen Chemicals, what would be the capital employed as of September 2025 on this business?
Sorry, we lost you again.
Okay. Am I audible now?
Yeah, now we are audible.
Yeah. So what is the capital employed in Acrylic Peptide and Sen Chemicals?
Yeah, Tarang, there is no major change from what we have said in the last earnings call. It is a total 450 crore of acquisition, debt plus equity. And additionally, we have invested another 100 crores for additional scaling up of capex.
Sure. Okay. And what could be the asset turn that you would have going forward once you completely integrate this over the next 2 years? Can you give some sense on that?
It's a CDMO business. So CDMO business asset turn would be completely different than the normal business, and also the margin profiles would be completely different. So we are generally not giving sales guideline, but what Sanjay has clarified already is, there is a base and we are not looking at simple incremental growth. It will be a multiple of the base.
Right. Important. And what is the internal timeline to scale this up? Would it be 2 years? Would it be 3 years? Or sooner than that? Just to get a qualitative sense on that.
Sanjay, can you answer that?
Sure. So the first year we want to just make sure that we turn profitable, and FY27, that's the target is to turn it profitable. In terms of a build out, the CDMO business is typically a long lead item, but it doesn't mean that we have to wait out 3 years to get to what we realize. I think we've been good shape in starting with a 6 months from now to an 18-month period. That's where we start converting some of the inquiries into the real businesses for ourselves. And we keep our investment proportional to the kind of projects that we start getting in. So again, stopping short of guidance, but we are not looking at a very, very long term beyond 3-year horizon. But the real build out happens from a 1 to 3 year period itself. In again, a multiplier function, not an incremental fashion.
Got it. And so I have one more question. Can I go ahead?
Yeah, go ahead.
Yeah. So if you see in the last 2 to 3 years, we've been around this ballpark top line of approximately 1,100 to 1,200 crores per quarter. And earlier we in the last phase from 2014-15 to 2022, we have grown at double digit. So would you think that with all these remediation and the new site getting approvals one by one, would you suggest that we would start growing at double digit from FY27 onwards on the top line on the base business and plus peptide business?
Yeah, I think you're right, Tarang. We were constrained by certain things last few years, but now, like I said in my opening remarks, we are going to have a breakout and get back on our growth track.
Got it. Okay, sir. Thank you and all the best, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Tarang from Old Bridge Asset Management. Please go ahead.
I was lost in the middle, so the last few questions were not by me, they were from someone else. In any case.
Okay, go ahead.
Yeah. Sir, just to get a better sense of the German subsidiary that's been incorporated, what's the thought process there? And number two, we saw very strong traction in both your Europe business as well as your US business this quarter. So has that got to do anything with paracetamol coming back?
A little bit, Tarang, not totally paracetamol. But now your first question about the German subsidiary. We are focusing on EU growth now. And we need to have a arrangement for stocking and selling. So that's the reason we are starting a subsidiary there. It will not be a big affair, but slowly we see growth there. And regarding the growth, EU is going as per plan. We had a little dull slowdown in the last quarter, but it's on track now. And of course, US, as we anticipated, mentioned many times, we are expecting a very strong growth from our US manufacturing, especially more than Indian products sold in the US. GPI as a standalone unit has picked up and doing quite well, and we anticipated good growth from there.
Has that meaningfully contributed this quarter?
Yes. Yes, sir.
Okay. Thank you, guys. All the best.
Thank you. The next question is from the line of Priti Agarwal from SK Associate. Please go ahead.
Yeah, thank you so much for the opportunity. I would like to know what were the key drivers behind the increase in EBITDA?
Yeah, so the key driver is largely operational efficiency. Operational efficiency, of course, includes various things in terms of yield improvement and some of the leveraging on the packing side, etc., and also product mix. And this EBITDA margin could have been further higher if the EBITDA loss of peptides was not there. So the product mix and operational efficiency has helped us in improving EBITDA.
Understood. And how did the 200 million EBITDA loss from SLE's peptides affect overall profitability?
So the turnover we have already covered in the presentation. So it is almost similar number of turnover quarter on quarter in Ascelis, 28-29 crores. And the EBITDA loss is about 20 crores from Ascelis.
Understood, sir. Thank you so much and all the very best.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible?
Yes, Maitri.
Hello. Yeah,
yeah, you're audible.
Just on the peptide business. So we said that we'll turn profitable. Are we expecting to turn PAT profitable or EBITDA profitable by Q4?
Sanjay, it's for you.
Yeah, in Q4 we should be a PAT profitable.
Okay, and do we see a lot of programs coming in this business? That is why we are expecting this PAT profitable from quarter 4, or this is mostly on just how do we expect this growth to happen?
No, I understood the question. So we do have the visibility for the Q4 right now, and if we execute it well, we are hopeful of turning profitable in Q4, and that's very much in the sight. On the inquiries and on the new projects, those are longer lead items, and those will get realized subsequently. But our Q4 performance will not be largely dependent on those development or any outcome of those discussions. But yes, there are indeed some great discussion that is ongoing, but these, I will just caveat it by saying that these are slightly long lead time for discussions and we'll have to wait out. But we're very hopeful of converting those.
Okay, so then the entirety of FY27, do we expect these inquiries to convert, or are we expecting them to happen post FY27?
So these are typically, we are talking to innovators with their in-clinical assets, and their programs It could be a calendar year 26, financial year 27, and the visibility we have is over a longer horizon as well. These will have the projects and the programs at various stages. In FY27, we are in discussions with companies with a program in FY28, and subsequently for the later stages, the project goes through. So these are a very long lead time discussion. Part of it can be realized in the coming year, and there will be an ongoing component from there based on the success of a project, and we become a co-traveler along the innovators on the other end.
Okay. And secondly, what sort of revenues do we need to clock in to have a positive EBITDA and also a positive PAT? I don't want any guidance, but like hitting this event, this revenue figure can turn us profitable, basically.
I won't be able to give you the exact detail, but when you see the Q4 numbers, we'll get a better idea on what could be a break-even number, both on the EBITDA and PAT front. We do have the visibility, and we will cross that in Q4.
What sort of visibility do we have, sir? Are these contracts that something we got into before this business was handed to us?
No, that I can answer. No, that matter I can answer. So as a part of our project, there are certain commercial products out of the previous projects which have gone to a commercial stage, and there are supply commitments, and those are phased out along different quarter. The visibility that we have for the Q4 for those commercial supplies items will help us take us over the profitability benchmark and break-even numbers.
So these projects, these commercial projects will continue throughout FY27. Is that also correct, right?
Yes, that will also be correct.
So could you give us like an annual range of what is this commercial project, like what sort of annual revenues? What sort of annual revenues?
We will not be. So, Matri, we cannot divulge more detail on more granularity into the business at this point of time.
Okay. Yeah, that is it from my side. Thank you so much for answering.
Thank you. A reminder to all the participants, you may press star and one to ask question. The next question is from the line of Aditya from Sowilo Investment Managers. Please go ahead.
Yeah, thank you for the opportunity. My question is on the Gagillapur facility. So I think earlier the timeline we were looking at was December 2025 to get the FDA to re-inspect. Are we still on that timeline?
No, man, not really, Aditya. We expected once we were ready for the inspection and once we informed FDA, we thought that they would come for a quick re-inspection. So we did get back to them last month, and they gave us a meeting only in January of 26. So, and after that, how long they're going to take is something we will see. But from our side, we are ready, and let's hope that it all happens fast.
Okay. So just to understand, so now when we say that, we need them to come and inspect. So what kind of, in terms of I don't know if it's the right word to use, but revenue loss because of this we are facing, or is it that, we are compensating for the volumes through some other facility?
We had constraints in capacity, and we were not operating at full capacity, Aditya. Definitely there was a revenue loss because of that. We did compensate from our US manufacturing quite well, and a little bit on OTC products from our GLS facility. But now with the approval of the GLS facility by the FDA, we'll be able to manufacture more RX products from here, and we should be able to make up for, and we should be able to increase our revenues. However, once the Gagillapur facility is out of the warning letter, we have some approvals, new products that are pending. And once we get those, I think there'll be a better increase in revenue.
Okay. So basically it's not that the existing volumes will just get spread. We have, there is scope for further revenue growth once it comes back online, right?
That's right. Not only from GLS, but also from Gagillapur itself, there will be better growth.
Yeah, understood. Yeah, that was my question. That's it. Thank you so much.
Thank you. The next question is from the line of Ritik State from One Up Financial. Please go ahead.
Yeah. Sir, thank you for the follow-up. So just one question. You mentioned that the consultancy expenses are still going on in this quarter. So can you just give us that figure for Q2 and H1 FY26?
Yeah, sure. FY26, I would hesitate to give because, continuously we are monitoring. But Q2 actual numbers I can give, it's at about $2 million in the quarter.
Okay. And first half?
First half is also, first quarter also of similar number.
Okay. So basically, there's a 4 million expenses that we have incurred in H1 FY26.
That's right.
And we see a trend of it coming down. I think
right.
It will come down in Q3 and Q4 it will come down drastically.
Okay. So FY27, this would be close to nil.
Yes, that's the expectation. Yes. Okay. Quite confident.
Sure. And sir, are we looking to do any product side transfer from Gagillapur to Genome?
Yes.
And what kind of timelines would you have for these products?
We have already made application for some of the products, and some more are being filed right now, which will be a CBE 30, and we expect quick approvals. I think about 4 to 5 products will be transferred from Gagillapur, and that will give us the needed capacity.
Got it. And so can you throw some color on the controlled substance growth for H1 FY26, and how do you see it panning out in the next couple of years?
I think, Priyanka, can you take that question?
Sure. The controlled substances were pretty stable over the first 2 quarters, but going forward, we have about going forward, I think, do you want short term or long term?
Yeah, for next 2 to 3 years.
2 to 3 years, we'll see possibly 1 to 2 approvals from the side, but then most of our products are about 2 to 3 years out. So we'll have the launches happen 3 years post, because most of them are patent protected and some of them are first to file. So we do expect tentative approvals to come in within the next quarter itself. Next quarter.
Okay. And what kind of growth can we expect from this business?
Without giving exact numbers, I'll say that there's going to be a significant growth over the next 3 to 10 years, because we have products filed until 2035. So we have a lot of confidence in this particular pillar of growth, and we're very excited to see this pan out.
Sure. Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Vivek Gupta from Star Investment. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yes, Vivek, you are.
Yes, actually, I just happened to join the call a little late, so I'm not sure if the question was answered previously. But yeah, I just wanted to know what factors contributed to the revenue growth in formulation markets in North America and Europe.
Yeah, the question was answered, but for your benefit, I think Mukesh will go through it again.
Yes. So in the current quarter, sequentially also we have grown significantly better. So some of the remediation activities are robust enough. The productivity improvement has happened already in Gagillapur. Genome Valley also started giving monograph products, and in the near future we will have other products also as per approval Q3, Q4 onwards. In addition to that, the year-on-year growth was significantly contributed because last year quarter, there was a US FDA audit observation and the plant was temporarily shut down. And third pillar of growth on the formulation, which is just now Priyanka has clarified, controlled substances also significantly contributing to the growth.
Actually, I'll also respond to that. We have also won some awards with our existing business, and if you recall a couple of, every con call, I always keep saying that some of the products that we pick are long-term products in terms of gaining market share. So we do have products that we got approvals for about almost 2 to 3 years back, and we're still gaining share on those products. So if you look at IMS data, you'll see that slowly we penetrate the market. Most of the products, we start with 5, 10, 15, and we go up to a very, very decent market share. And that's also contributed to the growth in North America this quarter.
Okay, that helps. So, why did the company voluntarily pause the production at the Gagillapur plant in Q2 FY25?
So this was discussed and explained in the past, Vivek, but then I'll explain once again. See, once the FDA brought in some serious concerns, we just cannot say we are good, we'll continue to produce. So we took a pause to assess the exact situation and to prove to ourselves and to the FDA that there is no risk, the product is good, there's no cross-contamination in the product. And we also told the FDA we have taken a pause, and they told us you don't have to take a pause, you can continue production. We wanted to hear from the FDA rather than doing it ourselves. And that has gone a long way in convincing the FDA that we are a very compliant company.
Okay. Sir, how did API and PFI sales in rest of the world markets impact the overall revenue growth?
It has been pretty good. It is there in the investor presentation. We have done good growth of PFI in Latin market, which we had a constraints in Q1 because of the capacity. Now, with the available capacity, with the robust remediation activities in place, we have capacity available and we are growing.
Okay. Thank you. That was from my side, and all the best for the future quarters.
Thank you, Vivek.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. Is there no further questions from the participants? I would now hand the conference over to the management for the closing comments. Over to you, sir.
Once again, ladies and gentlemen, thank you very much for joining us, and we appreciate your questions. And I hope that we have done our best to answer them. And in case you need some more clarifications, please feel free to reach out to our CFO, and he will be able to update you. And thank you once again, and have a good day.
Thank you. On behalf of Granules India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.